As predicted, the total number of homes for sale is on the decline as we head into the winter months. And we're going to end the year with a few more houses on the market than we saw this time last year, which is actually a good thing. The year will end with positive appreciation, and there's more under contracts now than there was this time last year. What does that all mean? Well, it's actually really good news. It gives chance for 2024 to be a much better year than this year, which ended up being one of the worst sales years we've seen in the last 20 years. I'm going to go over some of the key metrics in this video that's going to help get us an idea of what to expect for next year. And I also want to let you know in January I'm going to put together a very inclusive video that's going to go through a lot of graphs and data so we can get a better expectation of what next year is going to be like. My name is Jeremy Williams of the Bannack Real Estate Group, and every month I bring you hyper-local information so you can make smart, informed decisions before you read about it in the traditional channels. As we go through this, we're going to talk about where the market's at and give you some ideas of where we're going. So with that, let's get into it. One of the key indicators we're looking at is the number of homes for sale. And why we pay attention to this, it gives us an indication of supply and demand. So currently there's 216 homes for sale in all price ranges in Missoula. That's a very low number compared to our population. In fact, it would take 200 homes in a single month to come on the market just to get us to a normal market, let alone an oversupplied buyer's market. And to put that in perspective, back in 2010, there was 1,400 homes for sale in any given month. So there's a dramatic change there. We're still an inventory constrained market, but more inventory should allow more sales to happen. Currently, we're going to end up with less than 1,000 sales for the whole year. That's one of the third lowest sales numbers in the last 20 years combined. So pay attention to inventory as we head into the new year, because that's going to really give us an idea of whether the market's going to loosen up and allow more transactions to take place, allow people to get from one house to another in a little bit easier time period. Another key indicator that we're watching is, of course, interest rates. We can't have a conversation today without at least talking about interest rates and how they're affecting our market. Now, there are definitely, I want to say, baselines where when rates go over a certain point, we see activity substantially slow down, and when they go down under a certain point, it picks back up, and that seems to be around 7.25 and 7.5 right now. And I think that has to do with the price of housing and affordability. So when you get to a certain point, it's taking buyers out of the market. When it comes down, the buyers are coming back into the market. So interest rates is going to be a critical stat to be watching as we head into the next year of whether our market is going to continue to move forward or slow down. In addition to that, of course, I spend a lot of time talking about absorption rate. Absorption rate, basically supply and demand, and I track it in months of inventory. So if there's 6 months of inventory, it's called a normal market. If there's over 6 months, it's a buyer's market. Under 6 months is a seller's market. Currently, we're seeing 3.14 months of inventory, which is just up a little bit than what we've seen for most of the year. Now, with inventory, that's still considered a strong seller's market. And we're going to be paying attention to this because one of the correlations that we've been watching is the correlation between absorption rate, how many homes versus sellers are on the market, based on the price that the sellers get for their house. So we call it list to sales price. Of course, most of the year, list to sales price is the seller's been able to get 100% of what they're asking for, 100% list to sales price. Well, every time we've seen absorption rate go over 3 months of inventory, that list of sales price has come down a little bit. It's softened. So last month we saw 97% list of sales price, which in any market that would be considered normal. We usually, trend in a normal market around 97% list of sales price. But we're going to be watching that. So as inventory increases and there's more competition, buyers are having a little bit more negotiating power than they've had in the past. And watching these numbers is going to give us an idea of how we negotiate for houses and what we could expect coming into the new year. On top of that, because of our low inventory, we're still seeing appreciation. This year is going to end with 5 to 6% year-over-year appreciation. So home prices are still going up. I'm not seeing anything in the data that I'd expect that to change. It doesn't mean it won't change, but as the data is presenting itself right now, I do expect to see low inventory come into the next year and that appreciation continue to happen. So looking at these numbers, what does that mean? Well, if you're a buyer, look for the next month to be a great time to get a good value on a home. I don't expect prices to come down, but I also don't expect them to surge up based on what I'm seeing. So it gives you a chance to get a great value. As we head into spring, I do anticipate those prices to continue appreciating. So you can probably get a better value now if you're looking to buy a house. And of course, if you're a seller, you can still get a great price for your house, and you still can get into another house at a good value. With the market and the winter conditions, sometimes buyers and sellers are a little bit more flexibility. So if you're selling a house, it might be a good time and an easier transition to get into the next house, where some of the spring and summer markets, it's hard to coordinate the sale of one house and the purchase of another. We're going to be doing a deep dive into the numbers in the beginning of January and set our predictions for the year and follow them, of course, monthly throughout the year. Please subscribe to this video so you don't miss that video when it comes up. And of course, if you have any questions, we track a lot of data. I'm just giving you short segments as we go through these videos month to month, but we track a lot of data. If you have any questions, anything more specific, please reach out and let me know. As always, you can reach me on my cell phone. Number's 406-531-1519, and we look forward to talking to you soon.